Okay, everyone, welcome back. For those that were in our centralized joint forum session, I hope you got a cup of coffee and a bit of a leg stretch in, and we're ready to head into our Sanlam Umbrella Fund investment feedback session. We have a look at the agenda. We're going to have an economic overview with Solly, Marion, and Paul, who will have a bit of a debate around what's happening in the world at the moment and in the economy. We're going to have an update on the performance of our funds investment portfolios from Solly, and then David Gluckman will conclude and close for us. I think what's important for me to just take a minute at this stage and reflect on the growth of the Sanlam Umbrella Fund over the last number of years. We're currently just under the 120 billion Rand in assets, and the graph at the moment here just illustrates what our growth has been since 2017. So, I mean, we've come a very, very far way from 2017 when we were at 22 billion, and we're currently just under that 120 billion. So at this point in time, I mean, a big thank you to all of our clients, to all of our intermediaries that have assisted in making this possible, and also that entrust us with their members' life savings. We know within South Africa, a lot of our members don't have any savings outside of their retirement fund, and that, you know, this is a big chunk of their life savings, if not all of it. So we're quite honored and humbled to be entrusted with that money. So thank you very much to our employers and our members and our intermediaries for that privilege. But yeah, at this point, I want to hand over to Solly and the team for the economic overview.
Thanks, Anna. Good morning, everyone. So later on, we will be sharing the investment performance of members' portfolios. So just looking at the trustee-approved defaults and also member investment choice portfolios. But before then, you know, markets and economic overview provide useful context, the context in which these investment returns have been earned. And to have a lively discussion on those developments, I've been joined by Paul Wilson and Marion Gordon. So Paul is the Chief Investment Officer of Sanlam Investments Multi-Manager. My understanding is that, Paul, the assets under management, under your management, have surpassed 400 billion. So congratulations to that. Paul and his team are portfolio managers of some of the default investment portfolios at the Sanlam Umbrella Fund. Marion is a seasoned principal investment consultant and also branch head at Simeka Consultants and Actuaries. Thank you for joining us, Paul and Marion. Looking forward to the lively discussions. Yeah.
Thanks, Solly. Thanks, everyone.
So just to kick off the discussion, I mean, this is a panel discussion, so I'll be asking Marion and Paul some questions to share with us some views. I think hot off the press, earlier this month, the US went to elections. Trump emerged victorious. The party he represents, Republicans, look like, you know, it was a clean sweep for them. Yeah, just interested to hear your views. Paul, maybe I'll start with you on the implications on the world economy and investment markets. Who should be afraid? Who should be excited? What's your view?
No, thanks, Solly. Look, it's always interesting to try and translate political views into market impact. I think we obviously have the campaign trail to go by, so I think I'll speak mostly about the commitments Donald Trump made on the campaign trail. For the most part, his campaign from an economic standpoint was predicated around America first, and that resulted in sort of tariffs for particularly China, where America's got a big trade deficit, i.e. they give China more money than what China gives them, essentially. So big tariffs on Chinese products, potentially on Mexican products and some other emerging markets. And recently, for example, part of his border fight, because the Republicans are quite big on anti-immigration, anti-illegal immigration, they have actually recently stated that both Canada and Mexico will get 10% to 15% tariff increases on day one if they don't stop the flow of illegal immigrants. So Trump trying to make that illegal immigration, both Canada and Mexico's problems. So I think from that perspective, if you are China or Mexico or some other emerging markets or anything that's, would say, anti-American, I guess the likes of in Iran would fall into that category. I think then you've got concerns because the amount of trade from America to you is going to be reduced because you're going to be less competitive. South Africa also falls potentially into that category because we're part of the AGOA agreement, but I think the allies we've chosen to cozy up to the last sort of 4 years or so have been much more the China, Iran, Russia crowd, and not really the US. So I think Donald Trump's going to come looking at that AGOA agreement, which would obviously be bad, particularly for our automotive industry in South Africa. So I do think there's specific areas where you're going to get impact. It's probably going to lead to inflation of some level. Again, the other policies that Trump brought in, higher budget deficits implicated, which probably means higher inflation, higher interest rates for longer. So if you are American equities, and particularly what we would probably term like American Inc. or manufacturers in America, where you're going to get pretty good tax cuts under Trump, or the expectation is anyway, then I think that's a really good place, or people that would be excited about that. If you are emerging markets or get impacted by a stronger dollar, or impacted by high interest rates for longer or high inflation for longer, I think those are potential losers. Again, at the end of the day, what someone says on a campaign trail and what they actually implement are two different things. So I think Trump gets inaugurated in January. We'll have to see what he implements and then sort of make judgment calls based on that. But the Republicans do have the House and Senate. So for the next 2 years, they've pretty much got freedom to pass whatever policies they want to pass. So it's very much in his hands in terms of what he decides to do.
So I just want to turn to Marion, given what Paul has said, just on the outcomes of the elections. Trump is president-elect. Just on the newspapers, he said that Russia and Ukraine better sort themselves out before he's president. So I think this leads me to all the geopolitical events that are happening around the world. So I've put those in the screen, the conflicts. In your view, what does this mean for the investment markets globally?
It's a great question. We've actually seen significant rise in geopolitics more recently. I mean, on the Ukraine-Russia tension front, we know that the US, UK, and EU previously put some punitive pressures and measures on Moscow since the outbreak of the conflict. But more recently, we actually saw that the UK imposed fresh sanctions on additional oil tankers from Russia. And that's really to try to squeeze the funding from the Russian perspective on the war. We've also seen the EU tackle China from that front, where they have proposed to sanction several Chinese firms that it claims helped Russian companies, and those tensions are unlikely to play out in foreseeable future, particularly in the short term. But there's also reports that indicate that North Korea is expanding their weapons plant, and that this missiles would be used by Russia against Ukraine, and they've in fact also distributed troops, North Korean troops, to fight against the Ukraine. So it's quite interesting with the turn of events, with Trump being the president-elect. We know that Joe Biden was authorizing, or at least the reports state that he was authorizing the Ukraine to use powerful long-range American-made weapons inside of Russia in response. But Trump, as you've highlighted, has sought to see an end to the war, particularly because it's been a large drain on US finances, both in the form of military aid as well as financial support to Ukraine since 2022. So we are likely to see, a slight change once Trump comes into presidency in January of 2025. Now, South Africa has remained quite cautious in the matter, but we've seen more recently with, SA being the G20, in the upcoming G20 presidency for South Africa, Ukraine has actually urged South Africa to pressure Russia to also end the 3-year war. So it's interesting to see how this plays out in markets. Similarly, we've seen, heightened tensions in the Middle East, and that's had effects on Brent crude. We're seeing this ongoing tension between the US and China, as Paul has mentioned, particularly through the tariff war. And so we're seeing that markets are quite cautious. We've seen a rally in gold prices up 29% over the course of this year. But of course, as these geopolitical tensions increase, we could see, significant impact on supply chains, similar to what we've seen during the COVID-19 pandemic. With the rise in geopolitics, we could see then, an increase in inflation and interest rates being held higher for longer. What was interesting this week was the ceasefire in Lebanon, and we've actually seen OPEC release statements that they're considering reducing their production as oil prices are expected to come down. So there's a lot of factors at play at the moment. We are being cautious because, the geopolitics can cause a lot of uncertainty and volatility in the market.
So thanks for that, Marian. I think the picture that you're also painting is dire, but also, it's about a world that's fragmented. In your discussions with clients, what sort of, things are you raising with them in terms of approaching investment management of their portfolios? How should investors approach this world that you've just posted, that you've just painted?
Absolutely. So, we were touching on the negatives from a geopolitical perspective, but I think there's a lot of positive sentiment around South Africa. If you consider the formation of the GNU, investment into infrastructure, a lot of substantial assets being flown to the likes of renewable energy. That's also been quite positive for Eskom to improve its maintenance in its existing plants. All of these create positive South African sentiment as well. And so we need to balance a lot of these narratives, from a South African versus an offshore perspective. When we consider long-term retirement fund savings in the form of retirement funds, I think it's important for us to consider that, there will always be short-term noise, but it's really about how we structure our portfolios for the longer term. But what we are seeing from asset managers largely is a very positive sentiment on South African assets, particularly South African equities and South African bonds. SA, if you look at the capped SWIX, rallied about 19% year to date, and that's barring the negative October month that we've seen in SA, and that's largely on the back of financials, providing a 29% return year to date. We've also seen some good bond returns coming through, and so great value in South African stocks, and we're seeing asset managers, tilt slightly towards South Africa, particularly in the short to medium term.
I just want to go back to your point about stubborn inflation, higher for longer. You painted that picture, and also interest rates that are high. But the world economy has been surprisingly resilient. Rates have been high, but the economy's tended to grow. And then I just want to overlay that with the conflicts that we've seen as Marian, took us through that. Your view in terms of, future economic growth around the globe and also South Africa specifically?
Yeah, I think there's actually not negative news on that front. The global economy is expected to grow at about 3.2% next year, which is not a calamitous position if you're expecting like a giant recession or something, and a lot of the economic data is still positive. I think part of that is because in the US, when interest rates were close to zero, many consumers took the opportunity to lock in their home loans at close to zero rates. In a country like South Africa, for example, we don't really have that option. And in Europe, they can lock it in for 5 years, but in the US, you can lock it in for 30. So many people are paying close to no interest on their home loans in the US, which provides the consumer with some ammunition, which is why if we look at the American economy, it seems to be upgraded consistently. So I think it went from 2.2 expectation to 2.4, now to 2.8 for this year in terms of growth. So it's had continual upgrades. And until we start to see interest rates biting hard, it's difficult to see the world sort of crashing over. And at this rate, we're getting interest rate cuts. So the US, as an example, has cut 75 basis points since the highs. It did a 50 and then a 25. And it's probably going to do another % or so. So we'll probably end up with an interest rate of about 3.5, which, if you look at the long term, is actually fairly normal in the US. It's not abnormal. It's only because post the GFC, we've had very low and accommodative monetary policy. From a South African perspective, I think we've got less room to be optimistic on an interest rate point of view, but more room to be optimistic on an economic growth perspective, as long as we get our infrastructure and structural reforms right. So we've seen, for example, the last 6-7 months, we haven't had any load shedding, which is really great from an economic perspective, because it means companies are not having to pay extra for diesel. So that goes to bottom line. So share prices have been running as a result, but economic activity has been increasing. And we've seen South Africa also have upgrades. At the start of the year, we were expected to grow our economy 0.6. Now we're expected to grow it at about 1.1, and next year at 1.5. So, I mean, it doesn't sound much when you compare it to what the US economy is growing at, and in reality, we need more. But each small win is actually a really good thing. And I think we're starting to see South Africa move into a more positive environment, despite the high interest rates. And let's be real here. Lesesha Kanyako is not going to be cutting rates dramatically. His desire, and they've made it clear at the Reserve Bank, is to have an inflation rate of closer to 3 and to actually shift the inflation target from 3 to 6 to 2 to 4, which is more in line with emerging market peers, actually. But Treasury have got to make that call, but they'll manage the inflation target, I think, more in line with that, which is why, for example, when inflation fell to 2.8% last week, they only cut 0.25% instead of 0.5% as an example. So the market's pricing in for our Reserve Bank that we only have another 50 bips to go. So we've had 0.5%. We've probably got another 0.5% to go. But it doesn't mean we're not going to have good economic growth, because that's actually got to do with structural reforms, infrastructure investment, and stabilizing debt and improving unemployment, all of which seems to be happening, although obviously the pace of it is probably going to be slower than what everyone would like.
Marion, you brought the Government of National Unity to the discussion, the GNU, and it's been over 100 days since this was formed. So there's the question, are the markets still in love with it? What's your assessment of how the GNU has done? And, are we on track to achieve the necessary reforms, as Paul has mentioned?
Great question. I mean, there's a lot that was written about the GNU being an arranged marriage between two parties who are actually better off together than they are separate. In fact, what we've seen so far from political analysts is that both the ANC and the DA support levels have improved since the election. And so we are expected to see some disagreements within the GNU on certain policies. But overall, I think we are cautiously optimistic that they will run the full term. And in fact, the heightened debate between the parties within the GNU is particularly important because at least now there's a debate going and a more centrist view. And so, the GNU policies are expected to be quite business friendly. It's expected to have, improvements in the likes of investment and economic growth within South Africa. We're expecting SOE cleanups, if you're considering the likes of Eskom in particular and Transnet. And we're also, expecting to see a deterioration in state capture within South Africa. So all of those are very positive news for South Africa. As Paul has mentioned, we haven't seen load shedding since March of this year, and we've seen significant assets, particularly from businesses and households, plow into renewable energy products. And in fact, the energy mix within South Africa has now been altered and increased from 10% of installed capacity to about 20%. So all of that is good news. And in fact, 91 has released figures stating that 75% of the rand's underperformance over the last 2 years is attributed to load shedding. So it is expected to have a very positive influence, and additional investment in energy is expected to have a very positive influence. And then, of course, notwithstanding all of those factors, we also have Operation Vulindlela, which, in its first phase, saw, investment being unlocked to the tune of 500 billion. And so, moving on to the second phase of that, we are expecting to see key reforms from a municipality and an infrastructure perspective. In fact, we've seen modeling that suggests that if these reforms are in fact implemented, that it could raise GDP within South Africa to more than 3%. And add additional 1 million in jobs over the next decade. So that is fantastic. I mean, South Africa has not experienced that level of growth since about, our 2.5% growth figure in 2013. So at this stage, I would say that, businesses and markets are certainly still very favorable from a GNU perspective, but of course, we need to be cautiously optimistic, and as a result, be positive on South African assets at this stage.
So positive sentiment all around for South Africa. Looks like we have the right tools in the kit. We have tailwinds, actually, which is working well for us. So I'm going to ask each of you to say on economic growth. There has been talks of targeting, I don't know what that means, but the GNU saying they're targeting 3% growth of 3% plus. In your view, do we have the sufficient tools to do it, the sufficient political will to achieve it? Is this achievable? So I will start with Paul.
Look, I definitely think we've got the tools to do it, and we've got the skill in the country to do it. The question is always around political will, because it's going to require structural reforms. Now, we're starting to see some of that with the more public-private partnerships and the like, but there's definite potential in South Africa to reach 3% GDP growth. That there's no doubt. I think there's a lot of, when I say structural reforms, the things, some of them even revolve around quality of education and output and things like that, which obviously need to be improved. So it's not a simple flick a switch and things will get going, but you need to gain the confidence of business, which has been lost for the last decade in South Africa. The consumer doesn't have a lot of money to bail South Africa out. The taxpayer is under strain, and we've got a very small tax base for a very high expense rate. So that's not a place where you can go fish. The government has to practice fiscal restraint because we have very high debt to GDP level for an emerging market. So the place that you have to, and the place that's actually got a balance sheet that can spend is the corporate. So without the corporate and without the confidence of business in what the government is doing, we won't manage to get there. So that political will and the relationship between business and politics in South Africa has not been good the last decade, and you've seen it in businesses in South Africa not investing. We're starting to hear that that's turning around, though. So I definitely think we've got the people, we've got the capacity to do it. It's going to come down to how well business and government work together and how well they form public-private partnerships and how stable the GNU is, because if it falls apart and we go back to a phase where it's highly uncertain environment, there's no fiscal certainty, no view on how to, target inflation or jobs, or, I mean, it'll just get even worse. But at this stage, it's looking very promising.
Thanks, Paul. Your view, Marian?
Yeah, I echo Paul's sentiments there. I think instead of rehashing some of the items he's mentioned, I think it's worth noting that a lot of these, educational reforms, private investment by firms and growing capacity within South Africa has long-term multiplier effects. And it is a structural reform because it will take many years to get this right. But in order to kind of have sustained economic growth progress going forward, and I'm talking the next 10, 20 years, I think it would come down to implementation and political will, where, previously we have seen some lackluster, implementation initiatives within South Africa. But I am on the balance of probabilities, more positive. Again, it would come down to the implementation and the political will to make it happen.
Yeah, it's good to have a positive message, but that's also backed by sentiment, positive sentiment all around. And we're seeing changes at, grassroots level. It's always a good feeling to have this towards the end of the year. Now, you're parting short to investors and retirement fund members with long-term investment horizon. I'll start with you, Mariam.
My parting thought is to stick to your guns and trust the investment professionals of managing your assets. We've seen a lot of positive sentiment from asset managers in the industry, and that's off the back of a very positive year this year. The sentiment is also that positive returns within SA is expected to continue in the short to medium term, and so really just sticking to your long-term investment objectives, and not to be too concerned with the short-term volatility that comes with that. Overall, we are very positive on the GNU, very positive on the reforms that are expected to take place within the South African context, and as always, we'll remain close to the action to ensure that we are positive on a retirement funding perspective for members.
Okay, Paul, anything you want to add?
No, I always believe in, from an investment perspective, you want to focus on the long term. The short term is very noisy. I think obviously the younger the members are, the more aggressive their investment strategy should be. Keep investing. Markets go up more than they go down. So despite all the noise and the like, even the last decade, markets, particularly global ones, have gone up more than they've gone down. So again, trust the process, don't panic, and we keep investing rather than taking it out. That's the message.
Thank you very much, Marian and Paul, for the message, and also, I think, importantly, insights that you have given to participating employers, members, and other investors as well. Thank you for your contribution. I would now move over to the investment feedback session. Yeah, I think just to start off from the conversation that we had with Marian and Paul giving us the investment insights, over the 1 year, we have seen strong investment performance from the shares, which are equities represented by the all share, 23.9% over 1 year. Also property bouncing off very low levels, delivering 51.3% over 1 year. Bonds, including government bonds, doing 26.1%. And even when we look overseas, it's positive returns overall. This negative year, which is the rand versus the dollar, it demonstrates strengthening. So the rand has strengthened by 8.5% compared to the dollar. So overall, good investment outcomes from investment markets that we've seen, and we will now look at how these have filtered through the investment portfolios in which members are invested. So just as a reminder, there are two strategies in terms of the trustee approved default, so two groups of strategies. The first group is the life stage group of strategies and also the protection. The life stage strategies, have a philosophy that Paul and Marian outlined, that young members should have long-term investment horizon and they should be invested aggressively or have high allocations to growth assets such as shares and property in their portfolios. And these are the various life stage strategies that are offered there. And towards retirement, members are invested in a more conservative portfolio to preserve capital. Protection strategies cater for those members who are worried about investment market volatilities throughout their savings journey, and we offer 3 strategies on that. So more on the life stage strategy. So you have what we call the accumulation phase, which is this is relevant for members who are young, far away from retirement, at least 6 years from retirement. And when members get to close to retirement within 6 years, they are gradually being switched to capital protection portfolio, which is suitable for members who are very close to retirement. This portfolio provides explicit capital protection, but also participation in upside, such as those that we have seen recently. So I'll show you how that portfolio has performed as well. Another note is that under the life stage strategies, there is differentiation in the accumulation portfolios. So we have the Sanlam accumulation portfolio, which is geared for members who would like to get consistent exposure to growth assets or consistently high exposure to growth assets. We have the Sanlam Blue accumulation portfolio, which has been recently structured. So David is going to talk more about that. And then also for members who are, cost conscious or participating employers that want cost-effective investment portfolios, and also the peer-related Sanlam Wealth Creation portfolios. So which is, the right level of choice. How have these portfolios performed? So what you have in the screen there is the performance of the accumulation phase portfolios represented by the blue bars. So the Sanlam accumulation portfolio doing well in line with what we have seen in the markets, the double-digit returns and from the investment markets. And what is pleasing is that the portfolio has delivered in line with expectation. So in these types of markets, the Sanlam accumulation portfolio is expected to do well. While you would have noted, like over the last 5 years, that was a difficult period for growth assets such as equities and property. So portfolios such as wealth creation that are peer cognizant would have done well. But the two portfolios, they are well positioned to deliver competitive long-term investment performance. If we look at the rules-based or the passive strategy, which is illustrated by the Satrix Enhanced Balance Tracker Fund, so over 1 year delivering 22.8%, over 3 years delivering 12.5 and 12.2. So the portfolio has delivered competitive, and I think it has been ranking consistently more than the average over the long term as well. So switching to the preservation phase, while we're sticking to the life stage strategies, remember I said the young members are invested in the accumulation phase and then gradually being switched to preservation phase as they get close to retirement. How has this portfolio done? So the Sanlam Capital Protection has benefited from exposure to investment markets by delivering 10.6% over the last 12 months. So obviously it wouldn't have participated as much as the more aggressive portfolios, but what's pleasing to note is that the portfolio has protected capital over all time periods. So on a monthly basis, members invested in this portfolio cannot experience negative returns. It's also useful to compare the returns of the portfolios relative to inflation. So over 1, 3, 5 years and also long term, the portfolio has delivered strong returns relative to inflation, and we expect the portfolio to deliver around 3% of inflation over the long term. Just some pointers illustrating why members need to be invested in capital protection close to the portfolio. I have mentioned that the the capital invested in this portfolio is guaranteed, and at the same time, the portfolio provides investors with exposure to financial markets and equities. Even though the portfolio provides capital protection at the levels at which money market portfolios could provide, the difference is that this portfolio also exposes members to financial markets in a more smooth way to ensure that the portfolio delivers real returns or returns above inflation. If we look at the protection strategies, we have 3 of them. Sanlam Secure strategy, where the underlying portfolio is the monthly bonus fund, the stable strategy, where the underlying portfolio is the Sanlam stable portfolio, and also the volatility protection strategy, where this portfolio is invested 75% in the monthly bonus portfolio, which is a guaranteed fund, and then 25% into Satrix Enhanced Balance Tracker Fund. So these portfolios, if we look at 1 year, they have delivered in line with expectations. So the volatility protection strategy benefiting more from the exposure to the Satrix Enhanced Balance Tracker, delivering 12.9% over 1 year, and also delivering high single-digit returns over all time periods. Inflation is demonstrated by the purple bar here. You will note that the portfolios have, in fact, all of them outperformed inflation, which is a good investment outcome for the portfolios. If we look at the member choice portfolios, so these apply for members who have opted out of the trustee-approved default investment portfolios. There is a wide range of portfolios available, and the portfolios have varying risk profile from cash conservative right up until the moderately aggressive portfolios. The portfolios have done well. So the moderately aggressive portfolios all delivering double-digit returns, and over 3 years and 5 years as well. So members who are invested in these portfolios have benefited from excellent investment returns that we've seen recently coming from the investment markets. So you will almost note that there will always be managers that are underperforming or outperforming. So it is important that members, when they opt out of their default investment portfolios, they consult with the financial advisor to help them structure their portfolios appropriately. The moderate and conservative portfolios have also done well, which also form part of the member investment choice as well. I will now hand over to David to take us through the updates.
Okay, well, thank you, Solly, and to everyone, it's a pleasure to be here with you today. Solly, those are fantastic investment returns. It must be a nice time to be giving investment feedback. What I would say is, we have to be cautious. We can't really expect such fantastic returns forever going forward, but for now, things have done very well, and I really think we've served the members well. Just to talk from a Sanlam Umbrella Fund point of view, the Board of Trustees point of view, we've got 11 committees. One of them is the investment committee. I chair the investment committee, and these are the other members. We've got 2 independent trustees, that's Grant and Jolly. We've got Nzwa representing the sponsor, and we've got Kolisa, who's head of sustainability and impact at Sanlam Group. So I think we've got a very strong investment committee overseeing all aspects of the investments of the Sanlam Umbrella Funds. The committee meets quarterly. We have 6-hour meetings. In fact, our next meeting will be Monday, so coming up very, very shortly. Obviously, could sometimes be many issues that have to be tackled between meetings as well. So I'm not going to go through in great detail all the issues we tackled in 2024, and we did cover some of these at our Sanlam Umbrella Fund Symposium a month back or so. But I mean, some of the highlights, and Solly did mention it, I mean, reviewing our default investment strategies is always an important thing. So, one of our concerns has been, and I think you would have seen it in Solly's performance over 5 years, we were concerned that although some balance fund had done well compared to inflation, I think earning 9% plus over 5 years, it hadn't performed as well as we had hoped or as any of the other portfolios on our member choice menu. And we finally made the decision as an investment committee to replace this imbalance fund with the Sanlam Multi-Asset Growth Fund during the year, both on the member choice menu and as part of our Sanlam Blue life stage default strategy. That has been implemented. It's been successful. We've communicated to everyone. And really what it means is SIM will still be managing the underlying assets, but we've got Paul Wilson and the SMMR team doing asset allocation and bringing those extra skills in, which I think is going to enhance the performance. That really is our hope. Just to go through very briefly some of the other things, I mean, communication is always something we look at. Monitoring performance, I mean, we get feedback at every one of those quarterly meetings. We get monthly feedback as well. We even review daily unit pricing via our actuarial consultants. And actually, Solly, I mean, you talked investment performance, but you know, one of the things I saw on the Grey Swan investment survey, the most recent version, and it's not something, you know, I don't focus too much on short-term performance too much, but it is quite pleasing if you look at that survey, and that's the main survey of umbrella fund default strategies in the South African retirement fund industry, and you look over performance over both 1 year and 2 years, our three main default investment strategies came in number 1, number 2, and number 3 on both those measurement periods. So I think clearly we're doing, you know, something right. We are having a continuing focus on sustainable and responsible investing. I think the panel discussed that earlier as well. It's actually very important as well that we contribute as like a big fund. I mean, Anya mentioned earlier 119 billion now. We're a big fund. We must contribute to building a better South Africa. And you know, we're trying those initiatives as best we can. We're working with the asset managers, but obviously we don't want to sacrifice our members' performance in any way. But where we can invest for good, we are going to try to do that. And then a lot of other work on investment reporting, governance, etc. So the investment committee has been very, very busy in 2024. And I must say, every time I put together that agenda for the 6-hour meetings, it's always a packed agenda, and we always are struggling to fill to get to every single issue. Let's say moving on maybe to 2025, I think it's more of the same. For those of you who attended our Sanlam Umbrella Fund Symposium, I did mention that 2025 will be 5 years that I've been chairman of the fund, and I'm hoping I will step down and be replaced as the chairman of the fund sometime during 2025. I'll still be involved with the board of trustees, but I know the board want me to continue as the chair of the investment committee. So certainly that's in my planning for the next few years. But I think it'll be more of the same in terms of what we're going to do. We always will have the duty to review, monitor, improve the various investment choice strategies, whether they be default strategies or the member choice menu. We're actually going to specifically look at changes and enhancements to the member choice menu. If there are new additions we can add, if there may be some portfolios that aren't proving popular, we might have to look at those as well. Improving investment reporting and communication is always going to be there, and the focus on sustainable and responsible investing. So in summary, I think 2025 is going to be a very busy year again for the investment committee, but I think we're in a very strong space. I've been involved here since 2008 with the Sanlam Umbrella Fund, and I think on the investment side and on other aspects as well, I can't think we've ever been in a strong position. So I'm looking to the future with confidence. And really, that's all I want to say today, other than thank you. I also sat in the sessions, and I found them very interesting and valuable for myself. So I hope everyone attending did too. And thank you for your time. We know everybody's busy, got to finish things just coming up to the end of the year. So we appreciate that you took your time off your busy schedule to be with us today. I'll take this opportunity to thank everyone for all your contributions during the year, whether it be our contracted benefit consultants, our contracted financial advisors, investment consultants, or our participant employees or joint forum members. Thank you, everyone, for helping to build the Sanlam Umbrella Fund and to really try and improve our value proposition to our members. That's what we're all trying to do. We're trying to work together to do that. So I thank you. I'll take the opportunity to wish you a restful and break and festive season. And I'm going to close the seminar, but just to let you know, we're going to have a pop-up very soon where you can give feedback on the session, and please do that, because that feedback is vital to us in planning these sessions for 2025 and to improving them and making the content even more useful for all attendees. Thank you very much.